So on Wall Street, investors continue to interpret bad economic news as good news for the equity market. So today we had the ADP numbers come out, and the economy added fewer jobs than anticipated. But what I want to talk about specifically in that press release, and we linked to it in the note that we published a few moments ago, is the wage number. So wages were up 5.6% year over year. Now, I've always talked about how I do not believe the government CPI numbers, which CPI, of course, is inflation's price increases for goods and services. So if CPI, headline CPI is 3.2%, and if core CPI is 4%, and if we have wage growth of 5.6%, that implies that real wages are growing, real wages being wages less the impact of inflation. So if wage growth at 5.6% is outpacing the growth in inflation, whether you look at the core number or the headline number, why isn't the economy stronger? If wages are growing faster than inflation, why isn't the economy stronger? Why is the economy slowing? Right, and I believe the ADP numbers to be accurate. Generally speaking, numbers that come out of the private sector, especially when we talk about publicly reported companies, the number is going to be generally accurate. So I do believe the ADP number of 5.6%. While it may not be exactly precise, I believe it to be generally correct. I don't believe CPI numbers to be accurate for the reasons I stated in podcast episode 448 earlier this week. I just don't. The government has an incentive to massage them down. And so the reason why the economy is slowing is because wages are not keeping up with the growth in prices for both goods and services. Inflation is outpacing wages. It's not the other way around as is being reported. So I would love to have a member of the Bureau of Economic Analysis walk me through why the economy isn't growing if, in fact, wages are outpacing price inflation. That's all for now. See you next time.